How was the real estate market in December 2022 and how do we expect the real estate market to be in 2023? That is what I'm going to discuss in this video, so stay tuned. Hello, this is Sonia, your local realtor with Remax Realty Specialist. Welcome to my channel where we love talking about real estate and all things in and about Greater Toronto area. So the majority of Canadian housing markets balancing out with 60% anticipated to be the balanced market in 2023. The GTA is currently a balanced market, a condition that is anticipated to continue for the rest of 2023. Move-ups and move-overs buyers have been driving demand in the region, in a trend that is expected to carry on. Meanwhile, single detached homes remain the dominant housing type, followed by condo apartments. We are seeing three main trends that will continue into this year: continued interest rate increases and associated price adjustments, rising unemployment due to economic slowdown, and new opportunities to engage in the market for buyers and sellers because of improved affordability. For buyers, this includes having fewer competition, reduced prices, and increase in choices in the market. Meanwhile, sellers will have a trade-up advantage, reduced competition of listing, a stronger ability to relocate to the suburbs, and have all the advantages that buyers do too. The most desirable neighborhoods in the city are currently based on location and affordability, with access to transit being the largest factor. Rising interest rates are expected to be a dominant theme in 2023, resulting in a slower market for both buyers and sellers in the Greater Toronto area. These conditions are impacting first-time buyers in particular, with many choosing to pause their home buying efforts due to lack of affordability. Meanwhile, new construction projects are being delayed as a result of widening gap between market prices and construction cost, including the impact that higher interest rates have had on financing these projects. It's important to also consider some key context for the GTA. The pandemic years between spring 2020 and early 2022 were outliers in terms of pricing and demand, and factoring out those years in assessing what lies ahead for the region is important as we slowly tilt back to a post-pandemic recovery. This moderating market is an opportunity for home buyers to take the time to consider their needs, assess opportunities patiently, and ultimately making a wise purchasing decision and investment in the long run. Remax has recently released 2023 Canadian Housing Market Outlook Report, and here are the numbers for Ontario. In London, Kitchener, Waterloo, Barrie, the GTA, Durham, and the Lakelands West, that is Georgian Bay area, average residential sale prices are expected to decline by 2 to 15% in 2023. Sudbury, Hamilton, Burlington, Oakville, Brampton, Ottawa, Mississauga, Muskoka, Niagara, Windsor, York Region, Haliburton, Peterborough, and the Kawarthas and Kingston are all expected to see average residential sale prices increase between 2 to 8% in 2023. 40% of regions in Ontario are considered balanced markets, including London, Kitchener, Waterloo, Oakville, Barrie, Toronto, Windsor, Lakelands West, and Kingston. Hamilton, Burlington, Brampton, Mississauga, and Niagara are all considered buyers market, while Sudbury, Muskoka, Durham, York Region, Haliburton, Ottawa, and Peterborough, and the Kawarthas favor sellers. And now let's talk about how the market was in December of 2022. The Toronto Regional Real Estate Board says December home sales amounted to almost half those seen a year ago, as the area closed out 2022 with a marked adjustment away from 2021's record levels. The Ontario Board revealed that home sales in the final month of 2022 totaled 3,117 sales, down by 48.2% compared to December of 2021, when the market moved at a torrid pace as COVID-19 scuttled holiday plans. Last month's sales figure was a 31% drop from November 2022 and contributed to the market's 75,140 sales across the entire year, a 38.2% fall compared with the 2021 record of 121,639. The interest rate was repeatedly hiked through 2022 and now sits at 4.25%, highest it has been since January 2008. The hikes, which tend to spur mortgage rate increases, have weighed on buying power and forced many to rethink their housing decisions. Last month, new listing totaled 4,074, down 21.3% compared to 5,177 in December of 2021. Potential buyers sat on the sidelines of the market for much of the second half of 2022, awaiting further price declines, while sellers held off listing properties unless they have to move. Yet the year still ended with an average selling price of $1,189,850, up by 8.6% compared with $1,095,333 in 2021. Trapp says this growth was based on a strong start to the year, which eventually gave way to moderation in the spring and onwards. Last month's average selling price of $1,051,216 was down by 9.2% compared with the December of 2021 average of $1,157,837. Composite benchmark was down 8.9% on a year-over-year basis last month. So the next interest rate announcement is on January 25th, and I think we are not going to see any interest rate changes, at least for the month of January. If you're thinking of buying or selling real estate in the Greater Toronto Area, I'm just an email or a call away. Thanks for watching, and don't forget to join me next week. Until then, stay happy and stay safe.